All right, let's talk about one of the most powerful things in the life insurance world, riders. Now, what are they? Think of them like special features for a car or apps for your phone. They let you take a standard policy and really customize it, building the perfect, tailor-made protection plan for your clients.
Okay, here's our game plan. We're going to start with riders that protect against disability. Then we'll get into how you can cover the whole family. After that, we'll look at riders for big financial events, and of course the all-important fine print. And we'll wrap it all up with a quick quiz to see what stuck.
First up, let's look at protecting against disability and health changes. I mean, what happens when life takes one of those totally unexpected turns? These riders are that critical safety net.
Let's start with a foundational one, the waiver of premium. So what does it do? It's pretty simple, really. If your client becomes totally disabled and can't work, the insurance company basically steps in and starts paying the premiums for them. Now, there's usually a waiting period, about 6 months, but after that, their coverage is totally secure. It's an absolutely crucial piece of the puzzle.
But what if you could do even more? That's where the waiver of premium with disability income comes in. This thing is like the first rider on steroids. Not only does the insurance company pay the premium, but it also pays your client a monthly income while they're disabled. You can think of it as Waiver Plus. It's not just keeping the policy alive, it's putting actual cash in their pocket when they need it most.
Now this one's a real game changer, especially for younger clients. It's the Guaranteed Insurability Rider, or GIR. It literally lets them lock in the right to buy more insurance later in life, when they hit those big milestones like getting married or having a kid. And here's the kicker. They can do it with no new medical exam. So no matter what happens to their health down the road, they've got options. It's all about protecting their future self.
Okay, so we've covered how to protect the individual policy owner, but what about the people who matter most to them? Let's jump into riders that let you extend that protection to the whole family.
Now this one is specifically for a policy on a child, what we call a juvenile policy. It's the payer benefit rider. So imagine a parent or grandparent buys a policy for a kid, but then that person, the payer, either passes away or becomes disabled. Well, who pays the premiums now? This rider does. It makes sure those premiums get paid until the child is 21. It's all about making sure that gift of protection is actually delivered. So how can you cover other family members on just one policy? Well, here are two super efficient ways. On one hand, you've got the spouse rider. It's exactly what it sounds like. You can piggyback some term coverage for a spouse right onto the main policy. It's a really cost-effective way to do it. Then for the kids, there's the children's term rider. And this is pretty awesome. It's one single low premium that covers all the kids you have now and any you might have in the future. All right, let's shift gears a bit. Now we're going to look at riders that are all about responding to specific financial events, things like serious accidents or even the slow creep of inflation.
You've probably heard of this one, maybe from old movies. It's the accidental death rider, often called double indemnity. And it does exactly what the name implies. If someone has a $100,000 policy and they die in a covered accident, this rider kicks in and pays out another $100,000. That's a total of $200,000 for the beneficiary, a huge financial cushion after a sudden tragedy.
Okay, but there's a really important distinction you have to know with the accidental death and dismemberment, or AD&D rider. You have to know the difference between the principal sum and the capital sum. The principal sum, that's the big payout for accidental death, the full amount. The capital sum, though, is a percentage of that, say 50%, and it gets paid for accidental dismemberment, like losing a limb or your eyesight. So just remember, principal is for death, capital is for a major injury.
Now let's talk about a silent policy killer, inflation. A $100,000 death benefit sounds like a lot today, but what's it going to be worth in 30 years? Not nearly as much, right? That's where the cost of living rider comes in. It helps the policy's value keep up with inflation by automatically increasing the death benefit, usually tied to the consumer price index. It's all about making sure that money has the same buying power for the family years from now.
All right, so far we've talked about all the great things these riders do, but, and this is a big but, it is just as crucial to understand what they don't do. You have to know the fine print, the common exclusions.
Let's go back to that accidental death rider. The word accidental is defined very, very strictly in an insurance policy. A claim might get denied for a bunch of reasons. For example, if the death is a result of war or it happens while committing a crime, it's not going to pay out. Same goes for a high-risk hobby that's specifically excluded, like skydiving. The key is it has to be a pure accident, meaning an illness can't be a contributing factor. The details really matter here.
So we have covered a ton of ground here, and hopefully you're starting to see that these riders aren't just technical jargon, they're actual tools for real-life problems. So let's see what you've learned.
So now that you've got the toolkit, are you ready to put these solutions to the test? Because this is why this all matters, right? When you truly understand these riders, you're not just selling a product anymore. You're actually designing a personalized safety net for someone. You're building the right protection for the right person at exactly the right time.
Hold on, don't click away yet. Look, passing the life insurance exam is a big hurdle. But do you have a real plan for what happens the day after you get your license? I've been in the industry since 2011. I've lived the nightmare of driving across the state for a confirmed kitchen table appointment only to have them not even open the door for me. It's a grind that kills most careers before they even start. During COVID, I stepped away. I let my license expire to build the crown jewel for this industry, Priority Score AI. I realized the biggest hurdle for agents isn't just selling, it's the tech nightmare of launching ads and connecting leads. I built this to be your automated marketing department. With a few clicks, you bridge your Meta account, generate AI videos without a camera, and let the engine score your results so you only talk to the winners. We're building a team that leads with technology. Click the link in the description right now to see the crown jewel I built for this industry. I've got a video waiting for you that explains exactly how we're changing the game by automating your leads and scoring the best in real time. Get on the list.